thank you all for showing up. I'm going to introduce myself, which you'll very rarely hear me talk about myself. It's one of the things I hate to do the very most, but I want to just kind of give you a little idea of my background. I've worked for several large local CPA firms where I got to deal, directly with clients and work with their businesses and their personal information. Worked for a large national hotel chain when they were going through rapid, just exponential expansion, and learned a lot there. Worked for one of the big four accounting firms, and from there went to work for a communications advertising national company that had just gone public, and I got to be there for the first 5 years as they were going worldwide. It was a very exciting time, lots of things to learn and things to see. A couple of local CPA firms, and we've had this firm for 12 years, and really enjoying it. I had missed being in the big firms. You learn a lot and learn a lot of technology, but you can kind of miss, or I intensely missed the interaction with business owners and really making a difference in their lives. In big companies, you don't get that so much. So, all right, let's get going. We want to talk about today how to make tax season less taxing and more profitable. And part of that is just making your business less taxing and more profitable, less stress, less angst, and just more smooth running, and knowing your numbers and knowing what's going on. Most business owners I see, or many, know enough to keep things going. They're very good at their trade. They're very good at making sure the bills are paid, making sure payroll's done, training people, all that kind of thing. But as far as really fine-tuning the machine of their business, the machine part that is supposed to crank money, it's supposed to be just making money. They have a good feeling for it, but as the business grows, the feeling is not enough. And a lot of times, even the things that they have figured out over the years that they really have to know, like your bank balance and, am I going to have enough to cover payroll? And, can I take this big amount out of the business? You need more and more detail as it gets bigger, and it's less, you can do it, or everybody I've seen, as it gets bigger, you can do it less by the seat of your pants, and there's more to lose. So we're going to go through some basic things to set up and make sure you have running right. And it doesn't really matter what size business you are to do these. These are really good to do as early as you can, because you build that muscle memory so that as you get bigger, or as you just move along and things happen, like some imagine a worldwide pandemic happens, you will know instinctively the basics, and your foundation will be really good, and you'll be able to move along in a reasonable manner and suffer less than most people. So first we want to talk about real-time accounting is what we're calling it. And that's not accounting at the end of the year so we can get the tax return done. It's not accounting by the minute either, because that's really, you could spend all your time or a lot of money keeping things up that tight. But, weekly and certainly at least monthly accounting, so that things are very clear and clean, and you can see trends starting to happen. I have studied with Mike Michalowicz. I don't know if you've heard of him. He is a prolific author, and he's trying to stamp out entrepreneurial poverty. But he is a really brilliant, eccentric man, and has written a good number of books, and is any business book you pick up, a current business book, I see him quoted in almost every one I pick up. He's that outstanding. I've gotten to sit and talk to him and have some really good conversations with him. And so I'm following his profit first methodology. And that's what we're going to go through here. It's extremely helpful. His theory is that you can do income, less expenses is your profit. That's what we've all been taught. But really, that puts your business in charge of whatever falls out at the bottom is your profit. And his contention is, forget that. Let's do it. Let's do profit from our revenues, less our profit is then the expenses that we have left, and the business has to live on those expenses. That keeps your business from being this ever growing or ever eating monster, because you all know that it doesn't matter what you do, your business could use a little more money. It would like a little more money. You're getting emails all the time of people who are offering you things and wanting you to do things, and you want to have a great company. So it's real easy to spend, to let the business kind of drive that and spend more. But if we take our profit first, then your livelihood is guaranteed, which, remember, that was the point of the business in the first place. And then the business can be kind of lean and mean and be here to serve you rather than the other way around, which is real easy to let it happen. So one of the first things to do in this profit first is to set up several bank accounts. And the bank accounts operate something like the old envelope system, where you take your budget money and you put it in the different envelopes, and then you just spend out of that category the money. So the first bank account you would have is an income account. That's where all the income comes in. That's where your credit card deposits go. Anytime you make a check deposit, that's where they go. That's going to give you a real good vision of what income flow is happening in your business, because that's all that happens in that account is the income is deposited, and then you're going to distribute money to the other accounts. Okay, the next account that you should set up is your operating expenses account. That's going to cover, obviously, your operating expenses. That does let you know kind of what is your business eating. You know, where are we on the diet? So then we're going to have a payroll account. That's the biggest expense for most businesses. And if you had another expense that was bigger than that, you might make an account for that. But the payroll account, when you determine what payroll is going to be, you can put all the money in there, all the taxes related to it and everything, and then you don't have it accidentally any interaction between negative interaction between your operating expenses and your payroll. So, you know, maybe you pay an extra bill, or it would be easy to pay an extra bill if you were all in one account, pay an extra bill and then forget that you had planned on, you know, the payroll is coming along, or the tax payment is coming the next week. It'd be easy to spend that money sort of twice. So this just segregates the payroll. So in the payroll taxes, so they're safe and all taken care of. You would never spend anything else out of that account. Then we have an owner's tax account, and Mike's contention, and I love this one, and I think you will too, is that the business should be paying your taxes. For goodness sakes, you're the owner of the business, and it's working for you, and you'd like for it to pay your taxes as well. So this is going to help you save for any additional taxes that are over and above your withholding. Craig says he likes it. It is good, isn't it? It gives you a whole different attitude when you're paying your taxes if you just take it out of the business, because you've been provided for, and it is making the business work for you. It is part of changing that mindset that you are not you working for the business, but you're owning the business. So there's the owner's tax account, and then there's the profit account. And that really kind of is the most fun, because that money's for you. So the first thing is to set up all those accounts. And I found when I did it myself that the challenge was just having some funds to put in each one of those accounts, because, you know, you just can't open an account with zero, and being able to coordinate those a little bit. So if that takes a little bit of time, that's okay. But right now, a lot of people have a variety of stimulus money that can make that hurry up and get going. So that's really helpful. All right, so the first thing we'll do is set up those accounts, those bank accounts. The next thing is we're going to establish a routine to allocate your income by percentage to each one of the accounts. So there is a calculation in the book, Profit First, and we'd be happy to help you calculate those things. But what you're doing is you're saying, let's say you make $10,000 a year, or let's say, $100,000 a month. Let's say $100,000 a month. And so automatically we're going to say, okay, just to start off, 5% of that is going to be profit. We want to make at least 5%, got to do that. So the first whether you do it weekly or some sort of regular basis like that, you're going to take 5% off the top and put it in your profit account. And under no circumstances are you allowed to put it back in the business, invest in the business, plow that back into the business, because that it has nothing to do with the business. That's all yours. So the first one's the profit. The second one, I also have a savings account, and I also put an amount in the savings account. That's the order I do it, but you kind of grow as time goes on. So I was able to add that on. That's really rewarding. And when I have a month that doesn't go as planned, I can take out of my savings account. I'm not running up a loan, and I'm not having credit cards. I don't have to worry about all that stuff. It's all taken care of. And that is, the business has taken care of itself. I'm not scrambling. Then the next thing is going to be, I move most all of the income money. I leave $500 or $700, whatever makes sense for your bank and your numbers. Move it over to the operating expense account. From there, out of the operating expense account, I would move things to payroll and the owner's tax account. So it makes accounting a little interesting, but really once you get going, it's very nice. And then in your profit account, that's yours. And usually you don't take all of it, but maybe half of it you could just take. Using this method, I didn't know how to do this when I first started this business. I was lean and mean. I was lean and mean, and the business was more mean. But in doing this, I was able to save up $40,000 the first year that I did this and put a down payment on my house. It was awesome. It was so much better because I had just been plowing it back into the business, and I wasn't really getting anywhere personally. So it's just really rewarding that way. These are really good tools to help you do that. Okay, the next thing is we want to set up a foundation of accounting reports that help you monitor the business. And I know that sounds really basic, and I know we probably all know to do that, but we're not taking time to do it because we're running, we're answering the next thing, we're doing the next thing, we're getting the next customer, all those things. So to get just the basic reports, the balance sheet, which shows your assets and liabilities, your income statement, and that's the one you like to look at. That's the one we all look at. The income statement, just which shows the revenue and expense and profit. And then the statement of cash flows. The statement of cash flows is going to let you know what's going on with your cash. And that is so vital. I can't tell you how many people who make a lot of money, they come to me at tax time and say, if I am that profitable, I don't know where the money went. And so that statement of cash flows, looking at it on a regular basis, is going to let you know where the money went. It's going to keep you in control of your business. And it just makes it very clear what your decisions are doing. One thing I have really learned, and I think I want to share with you, is that I am where I am because of the decisions that I have made, not because of anybody else or anything else. Sure, pandemics happen, but I was able to make decisions and handle my situation. I was given all of the opportunity and all of the authority to take care of it. And so the results that I have came from those decisions. So there's no way we can make good decisions if we're doing it by the seat of our pants and trying to remember and make assumptions about what we're doing. Because it just doesn't work like that. I don't know about you, but I don't remember what I ate 3 days ago. So I certainly don't know what I spent that on, or adding all the numbers together doesn't help. So to have some good, solid reports that you look at on a regular basis is very helpful. With those 3 reports, the balance sheet is the one that gets neglected. Well, cash flow doesn't get done hardly ever, but the balance sheet gets neglected on a regular basis. And the balance sheet is showing you how your assets are growing or diminishing. It's going to make you really take account of any liabilities that you've run up. A really quick way to get in trouble is just to use the credit card or a little bit of that line of credit or something, and somehow that becomes automatic and that becomes painless. And suddenly it is a bigger it is a bigger snowball than what you ever imagined. So just a regular looking at the balance sheet is going to give you that control over your business. You're going to have a good idea of what is going on here. And before it gets to be a pattern that you have difficulty in fixing. The profit and loss is very interesting. I think it's the one that, we all work for, and it's the most fun. I like to say that the top part, the revenue and the cost of goods sold, is what makes up your business. Whether you're a dentist or an architect or a store owner, a restaurateur, you have the revenue that's come in and the cost of all of your inputs to the business. That's what it is doing to do your type of business in your industry. And so from there you get your gross profit, and you know how much profit you're making just doing your business. But then it's all the other expenses, all of the rent and the insurance and all those things. Those are the cost of doing any business. And those are very important because it's really easy to spend a lot on those and not really notice it. And so you could have good gross profit at the beginning, but once you pay for all those other little things for doing business, you can end up with no profit. And you won't, the business doesn't go anywhere like that. The business really needs to produce, and it needs to be your best employee. It needs to be working for you really well. So the profit and loss is really valuable. And to look at, my favorite way to look at the profit and loss is month by month. So you can really see what the trends are. You can see, okay, this is what I'm bringing in every month, and you can find things, expenses, maybe something didn't get paid, something got paid twice. It just is a really nice report to see, to get a good feel for your numbers. All right, so here's the key part. Establish a non-negotiable routine to review those reports. So most people go to work and take great care of their customers. I don't have any clients that don't take great care of their customers. And you want to take great care of your employees and have that great culture and make sure the money's flowing properly and have a good reputation and all of that. And goodness gracious, when are you going to have time to sit down and look at these dry reports? The bank balance looks good and we're just going to roll. That's a good way to get in trouble. And most people, if you haven't gotten in trouble that way, you might get in trouble. So just to have better control and better feel for where are we on the map of this year is to have a non-negotiable review time for those reports. We suggest that, 15 minutes every morning, just stop and look at things. Something happening, is something weird. I know I had one time when I wasn't stopping and looking, and well, it's a very clear example. We pay for tax return software, and some of it's a package, but then some of it's as you use it. Well, I had charges coming through, always do, from the as you use it part, and I wasn't really paying attention. Well, they accidentally took an extra $10,000 out of our account over the year, and I just didn't stop and look and see that. So there are things that you can you'll see if you're looking at the month to month and you have an idea of what should be coming out. And I learned a really expensive lesson because they weren't very good about giving it back. But it's just a good way to keep under control all the things that can go on in your business and with your cash. All right. Okay, the non-negotiable part is the part that's interesting, and it's the part I struggle with as well. It's just important to have somebody to answer to. Some meeting set up on your calendar, sometime to talk to your accountant, sometime to just go over these and have somebody say, yeah, let's look at them 15 minutes a day. And so we would be happy to do that. We have started doing that with a good number of clients, and it's just a good way to get that habit in place and get that accountability going. But if that's not it, maybe your spouse or a friend or somebody in the business, but something where it's non-negotiable and nothing comes first before that reviewing of the financials and your schedule, so that your most valuable possession is the best protected and continues to produce in the way that it should. All right, so now that we have we have reports, we have a schedule, we have a way we handle cash, then we want to look at what are particular things about your business that would make a difference. So it's going to be the, that's so funny, KPIs. And right this second, I thought about earlier, well, I remember what key performance indicators, isn't that funny? Okay, key performance indicators, the KPIs for your business. And it could be any number of things. It could be like at a restaurant, they want to know how many tables turned over or how often the tables were turned over. You know, how new customers came and took a table in their restaurant. What's the speed there? Maybe, you know, the coffee place wants to know how many cars go through the drive-through and how fast do they. It may be for you, how many, how much materials are you using for each project? How much are you paying for them? What's your profit over for each job? Just your gross profit for each specific job by customer or each specific type of job. Some lines of business for you might be much more profitable than others, and it's important to know that so you can make your decisions as to what business do you want to chase and what business do you want to fund. It might be maybe just our employee heavy, and it might be that you just need to know for all these employees that I have, what's the revenue per employee? Just divide it, just a simple division. What are we doing here? And that's going to help you focus on making those employees more profitable, more efficient, or maybe less employees. So because everything has to be feeding this cash making machine in order to make the business worthwhile and worth the risk to you to even do this, rather than being just an employee for somebody else who can carry all the headaches. So all right, so we have KPIs, and really for most clients, we just sit down and figure out what do you think is going to be the most important one right now, and it's a little by feel and a little by gut, but it's something that you design. But then again, the non-negotiable review of those numbers. Okay. Next, you're going to run the profit and loss report, like I talked about, by month for the last 12 months. It doesn't have to be a calendar year, just the last 12 months. That's going to give you some feel for the trend in revenue, the trend in your expenses, the trend in payroll. It's going to give you a real nice vision of where you've been. So using that, we can just spot trends while they're still in their infancy and they're still easy to control or easy to stop or easy to mitigate in some way. Then from that, we're going to learn, and I'm going to tell you now it's time to make a budget. And I'm pretty sure that probably 95% of our clients don't have a budget. It seems constraining, it seems difficult, it seems difficult to maintain, that kind of thing, but it really isn't. It really is a guardrail to keep you on the goals that you set. So it's very easy for us to also set that up in the accounting system to make that easy for you to review, or if you have your own accounting in-house, then for you to set up. But the budget isn't set in stone. It's great for you to say at the end of the first quarter, you know what, we didn't end up picking up any of that revenue I thought we would. That particular line of business, it's not going to work out for us. So you switch your budget. You switch it. You say, okay, our new expectations are this, and we're going to tweak for that. So it's there to work for you and not you for it. This is the whole mindset. This business has to work for you, and these are kind of the job description for the business. And you just see how it performs as you go along. So, but working with the budget is going to give you that muscle memory that this will become habit for you. You will get a very much better feel of how your business is doing and what all your decisions, you'll completely know what the impact is going to be and what the controllable part of the impact is going to be anyway. And it'll put you in a better position to make these decisions. I have a good number of clients and a good number of people I've seen over the years, especially Texas male business owners. Big reason for having the business is I can buy a new truck. I can buy a new truck and save taxes, and I can go home and tell the spouse I had to buy a new truck for the business to save taxes. But I think if they actually stopped and they saw what those payments were doing to their cash flow every month and what those were doing to their profit, that they might decide that they really didn't need that big truck, not every 2 years, and that there are other ways to save taxes besides buying another truck and supporting the truck industry. So it really is muscle memory, it's getting used to doing that, but also being willing to see what the actual truth is. Because all of us would like to feel like we're doing a really good job, but we know we're fooling ourselves. I don't know about you guys, but sometimes I think if I eat something and no one sees me, it doesn't count. But it's just the same in your business. There are things that it's easy to say, I'm just going to do this. And it's just, I don't have to answer to anybody. That's why I own the business. But putting these things in place are going to make the business where it's a wealth producer, not just a risk producer and something to pay bills for, but it's going to actually begin to build your family's wealth so that you can give and you can take care of the people that you love and you can lay a foundation. Maybe you can have a great time in your retirement, those kind of things. So the things that you came for. All right. So then we've got all that. A lot of times when working with the budget, the focus is on, one, just bumping up the revenue, and two, just cutting expenses, completely cutting expenses. I just think for most responsible business owners, you can cut expenses some, but really most people are fairly conservative, except maybe the truck. Everybody's got their thing. But so I really suggest that once a quarter you allocate an hour just to take a look at the expenses for the complete purpose of just, is there anything I need to cut out? Maybe you've subscribed to some sort of newsletter that you're not really reading, or maybe a service that was related to that line of business that you cut, and it just, it's doing the monthly recurring thing, and you could just turn that off. Those kind of things. It's just this is a maintenance time. So an hour a quarter is more than enough to do this. We also, one thing that we're going to learn is looking at our gross profit. We can keep racking up revenue. I had a whole bunch of coaches initially in this business, and the really poor ones, although I liked them very much, but the poor ones just said, gosh, just bring in more revenue, bring in more revenue. Well, I brought in more revenue. I got more stress. I had to hire more employees. But the net profit didn't make a difference. So there I was. I had dug myself a deeper hole and still didn't have any extra net profit. So we have streamlined all those things so that we have a limited number of clients and they all bring in the amount of profit that they're supposed to, so that we're not having just to keep running and keep running and keep running. We're trying to, we can do what we do very well and come out with the profit that we need to for the business. So it's a much more peaceful lifestyle. It makes more sense. It gives us more time to work with each and every customer and give them the client and give them the best that we have to offer. So that's another thing you're going to glean, or you can glean from looking at these reports, is what am I spending my time on? Do I like it? Do I like the people I'm working with? Does it make money? Or maybe it should be a hobby. sometimes we like to do things in our business that probably should be a hobby on the weekend, just for fun. And they're distracting from the business. So taking a regular look at the numbers is going to help us make those decisions. And we can do whatever we want on the weekend, which is much better. Okay. Does anybody have a question so far? Oh, I see. Nick, I see your question. Would you consider having a capital expense account? Yes, and I have done that before as well. It's just super smart to be saving up for that next big expense that you want to expand the business. And that would be awesome. Probably I would, during that time period that I decided, you know, for the next year, I'm going to save up for the big equipment. I might decrease my savings just a little bit, my savings percentage, and probably decrease my operating percentage just a little bit, just tighten it up good and use that extra money to put into the CapEx account. I think that's an awesome suggestion. Absolutely. Absolutely. And it just makes all the difference. Then you're paying cash for things and, you know, not having to worry about the beast and paying for things that you did 6 months ago on a credit card. So that's awesome. Exactly. All of those accounts, kind of to follow your statement, those accounts, I gave you the basic ones. And then as time goes on, there may be an account that you use for something specific. I had a period of time where I had employees and they were starting to rack up a lot of vacation. We were working a lot and they just weren't spending their vacation. And suddenly I realized, oh my goodness, I'm gonna have to pay these people for these days when they're not gonna be working. And it became a big sum. So I started putting money aside in that account to be able to float those days. So I wasn't gonna have to worry when they took 2 weeks off or whatever. It was gonna be fine. But it's all gonna depend on your circumstances and the time in the business, the time in the world, all of those things. So great suggestion. All right. So once you've got those things going, so what we're going to go through, we set up some accounts. We decided how much profit the business should make or needed to make, and then we set everything else from there. We began to work that system and put money in each of those accounts as a mechanism for our budgeting and for our profiting first. Then we developed reports so we could watch that progress and detect any problems that we had early on so they didn't become large. Then we made sure that these were non-negotiable, regular review times to go through the balance sheet, the income statement, and the statement of cash flows. And any other key performance indicators. I thought I was going to miss it that time, but I didn't. KPIs to keep things in line the way we want them to be. So here, that is building you a level of security and control over the business that you have. Now, what does that have to do with making tax time less taxing? Well, I know what Craig mentioned before, liking how the business is going to pay the taxes. That's awesome. That's really awesome. Also, just making the business less taxing, less of a pain, is having it under control like this. Getting it where it's working for you and not you working for it, and where you know what's happening all year. And if you have your accounting done elsewhere or you have it done in-house by someone else, hopefully you're not doing it yourself. You can make a lot more money not doing that. But this is helping you stay in tune with that and knowing what the machine of your business is doing. Does it need more oil? Does it need a tune-up? Those kind of things. With all that and with your knowledge, with the knowledge that you build from doing this, the muscle memory that you have, as you approach tax time, you're going to be learning, okay, this happened last year and it it tweaked it this way. So I think that specific incident is not going to happen again this year. So I need to know what's the impact of that? How's it going to change my business? How's it going to change my tax results? So going through the year, you've got a much better opportunity to plan for taxes, to mitigate taxes. There are a lot of good tax saving ideas besides buying a truck. I just don't believe in buying a truck to save taxes. Sorry. And and you have time, but you're in control of your money instead of in the business, the machine of the business, rather than waiting till the end and someone telling you. Even if you're one of our clients, we work with you, but this is going to make you're going to pick up and be the whole owner of the business. And we're going to be helping you get this to produce what you wanted to produce, to actually achieve the goals that you set out for, and not just that, you can buy a truck and don't have to work for anybody, but actually build wealth for your family, build security for yourself, get you a retirement nest egg, let your children go to the school you want them to go to, all of those kind of things. We can work on the machine with you when you're in that kind of control and get it where it's really working for you and making a lot of sense and meeting your goals. All right. So I'm going to, at the end of this webinar, we'll put together a sheet that gives you just the outline, just the basic points of this for you, so you can remember. And maybe you're doing, most of them, but maybe there's one that you could do better, or one you could add to your normal routine that should make things go a little bit smoother. If you need help with the profit percentages, the percentages to allocate to the different accounts, we'd be happy to help you. I do heartily recommend the book Profit First, and his name is Mike Michalowicz. So Michalowicz is kind of like Michael with an O-witz at the end. So if you want to spell it, but the Amazon picks it up pretty quick. Anything he writes is wonderful and very, very helpful. But we'd be glad to help you implement into anything that he has suggested, but most importantly, the Profit First. We really feel like that's the best first step, and getting in control of the machine of the business is going to really make all the difference. And then we could add the other things on that he does. So what other notes do I have here? This is foundational. It is to set up things so that you're ready to really do some strategic planning and some strategic growth and grow that profit in an enormous way. We really want to help you all move forward down this road, and you can grab the books and we'll help you move along and get your business where you want it to be.